Okay, so it's gone a little past 10 o'clock. Apologies for the slight delay this morning. It is Monday, the 3rd of November 2014. It's the first week of a new trading month, and the data in the first week of the month is dominated by the central bank's unemployment data. This week is no different. On Tuesday, we have a release from the Reserve Bank of Australia with their cash rate and statement. We also have Kiwi unemployment data. On Thursday, it's Australian unemployment data, but the main events will be Bank of England rate and statement, and that's followed closely by the ECB minimum bid rate. Also on Thursday, the ECB will be holding a press conference that usually happens around about 1:30 UK local time. So be on the lookout for that. That is usually a volatile event, particularly for the euro crosses. Friday, I think, as usual, that's going to be the big day this week. We have USA non-farm payrolls data, so USA unemployment data, or employment data rather, and as well her little sister, which is the Canadian employment data, which is released around about the same time, but usually ignored by market participants because of the significance of the NFP data itself. All right, we're looking at a handful of trades this morning, or a handful of charts this morning, which we are particularly interested in. So I'm going to take a look at those because they are approaching entry level, and then we're going to look at some general analysis at the beginning of this month. The month has yet to establish core direction, and until core direction has been established, you're always going to be a little bit cautious placing your trades and taking your entries. But we do have some pretty keen technicals coming up. What I'm looking at first off is the yen crosses, and I've been looking at pretty much all of them. And I always find it interesting when you have several yen crosses and all of them approach or reach a technical support resistance structure at the same time. I always consider that to be meaningful. Often it is, and sometimes it isn't, right? But isn't that the normal experience trading the markets anyway, right? So first off, GBP JPY, right? This is the H4 chart, and what we're going to do is take a support wall, just connecting the lows from back in September. And I want to highlight that there's a couple of ways of connecting this, right? So I'm just going to take the H4 there and drop down to an hourly time frame. Yes, this is the one, right? So just there. Okay, just there, right? So these are the points if you're looking on the hourly. All right, so we've connected that low there, and we've connected this low here in order to create that wall. If you're going on a H4 time frame, it's probably actually a little bit more visible, right? So it's that low just below the breakdown candle. And we've got the price approaching the underside of that. We saw a very, very significant rally in this instrument last week. So that rallies to the tune of about 600 odd pips. It's not unusual to have that momentum follow through a little bit. This is on the back of what could only be described as intervention by the BOJ. So counter trend trade, fighting the momentum, but we're going to be looking for a defense here of the 81 price handle, right? We're going to be looking for a defense of the 81 price handle, and she's coming to strike the underside of that wall. Any kind of sharp reaction or rejection, right? Maybe on an hourly time frame, if you want to be conservative, if you want to be aggressive, you just go right on the wall, right? But we want to see some kind of rejection from here, and if the price gets rejected from here, we believe that there is room for a significant retracement of last week's move, certainly to the tune of 200 to 300 pips at least, right? So that's something that I'm going to be looking for here on GBP JPY once she has gone and struck that particular wall. I think will make a very, very interesting play, and maybe even by the time that this presentation has concluded, we will be in a position potentially to be confirming a entry here. All right, so just remember it's counter trend. We're fighting the BOJ, but it does look like a pretty good technical entry. We've got a support wall. We would very much suspect that support will be turning to resistance up on that level. So we're going to be looking for a defense of the 81 price handle once she goes and strikes the underside of that wall. What makes it interesting are the other JPY crosses, right? So we have similar technicals pretty much across the board on the JPY crosses. This is USD JPY, and here what I've done is just to connect the resistances, right? So a little hooking structure here, so we know that that's resistance. She comes back, hooks again. So we've taken the hook against the high, and again, she's just kind of hitting that, and she's gapped up to that level. So we do rather suspect that she should break down from there and the wall should hold. If it happens that the price ends up breaking through the wall, that invalidates our bear bias. And it's exactly the same with the GBP JPY, right? So any break through the wall, hourly closes above there, that's invalidating the bear bias. But if it happens that she's broken through the wall and the price falls down again, you've got an overthrow and a throwback situation, and at that point, you would say that the bear bias has resumed, and again, you'd start looking for a follow through to the downside. So I am prepared actually here to look at more than one entry, right? I'd like to see the wall hold, but if the wall is breached and then the price falls back under the wall, I will look to play this again and look at seeing that wall becoming or acting as resistance again. So the wall defines the bias. The proximity of price above or below it defines that. If she's above the wall, it demonstrates bull strength. If she's below the wall, it demonstrates that the bears are starting to take control, and that is the actual scenario I'm interested in the near term this week. The price holding below this particular wall on USD JPY. A similar scenario on NZD JPY, right? So this is something pretty much across the board on the yen crosses, and what I'm doing with this is something like this. Right, we're going to connect it here. Right, so this is the H4 time frame, and so just connecting the low, connecting the kiss back candle, right? So on H4 you can see a kiss back there on the H4 candle. I'll zoom that in. Right, you see the kiss back there. So just connecting that kiss back, and he explained the stall, right? This is why actually, out of all of them, this is the chart which I like most, right? And the reason I like it that much is that we had a very sharp reaction at that wall already. The price collapsed from, let's have a look. The price collapsed from the 88 price handle down to 87.20 odd. So she's already given an 80 pip reaction. Again, I'm looking for the wall to hold, right? And any bearish bar off of that would act as a confirmation to me. If I'm right here, I very much suspect that she could go and retrace the whole of that move, right? So the breakout here is about 250 odd pips. If the wall holds, then we could be looking at a complete retracement. If it happens that the price ends up breaking above it, again, I would consider that to invalidate the bear bias, but I will be on the watch out or on the lookout for an overthrow here with if she has broken above it, I'll be looking out for an overthrow and throwback. And if I get an overthrow and a throwback, that will present another opportunity in order to be playing a short on this particular instrument. And again, if she fails here, I do believe that there will be opportunities higher up, just past the 89 price handle in order to be shorting this instrument. And there is reason to believe that so long as the 90 holds, that we have a top in place on NZDJPY, and I very much suspect that she will push through that. The entries have to remain technical, though. That is really the key issue. And just bear in mind that if you do take these positions, you are really fighting. We are fighting momentum here, but it is worth taking some exposure. And then if we find the direction of the month changing, so the price, for example, falls below 87.40, you can add a little bit more. If she goes and falls below 86.50, you can add a little bit more to that short position until and then take on a full exposure in that manner, right? But all of these are fairly close to the level. So like I said, just watching it closely this Monday morning, going to see if we can get some confirmation of those walls. If we do, then we are very much interested in the short play on these instruments. Just final note on these yen crosses is that here we're talking about yen strength, right? That's effectively what we're looking for when we're talking about a short play on NZD-JPY, GBP-JPY, USD-JPY. So it is not three different trades. It is one trade. And because it's one trade, you have to watch your exposure, choose your pair, and trade that one. So, if you're trading NZD-JPY and you've taken full exposure on that, do not be taking a additional exposure on GBP-JPY or USD-JPY. If you end up being wrong on one of these, you will end up being wrong on all three, right? That's how it's looking right now. So this is exposure to the yen specifically. We can see that across the board on all the yen crosses, right? That all of them move in sync with each other. So this is a yen play. So do just mind your exposure there. Choose one and play that one. I do like the NZD-JPY above USD-JPY and GBP-JPY, but they're all the same. If one of them is going to collapse, then all of them will collapse. We're just looking for a little bit of follow through here, and once that follow through is completed, and if she chooses to react at the wall, we will look for the price to fall back and retrace last week's move. If it happens that she can fall below the 85 handle at any point, I think that will be a very, very significant sign of bearish sentiment, particularly here on the NZD-JPY. Okay, so those are the trades that I'm interested in this week, which is why I've turned to them first, and particularly as well because the price is approaching those levels, so I thought we'll cover those first. We also have some general analysis on the crosses, so let's take a look at those. What do I want to cover? Right. Okay, so let's start with the Euro USD. All right, so is the Euro USD. A couple of weeks ago when we were here, we highlighted the significance of the 26 price handle, and the reason that has been significant is that is the quarterly opening price, and we saw support having been established at that price on several occasions. And what we said is that so long as the price is able to sustain and hold above the 26 price handle, we would consider the bulls to be in charge. Once the price falls below the 26 handle, the bears are back in control, and we're just reading sentiment using the direction of the month in order to do that. So not only was 126 the beginning of the quarter, but it was also the opening price for October, for the month of October. And as long as the price remained above that, what it meant was that the October monthly candle was facing in a bullish direction. Last week, we saw the price collapse down below that 126 price handle. We saw a pullback to the same area, and the price collapsed further. What it means now is that the bears have taken back charge of Euro USD, and it's just a question of reading the sentiment. So I'm marking a trend wall, something like this. That's just taken from support, and we have resistance here in the near term. And what I'm saying is that so long as the price remains below that wall, I would consider the bearish sentiment in the Euro USD to remain intact, right? So this is near term. We're talking about this collapse here that we saw last week. And what we're saying is that so long as the price remains below that wall, that's coming in around about the 25.50 area, maybe extending to around about 25.60 or something. But 25.50, I think that's good enough. So long as the price remains below that, we're saying the bearish sentiment is intact, and we would suspect a follow through to the downside. We still hold the 126 area as the overarching sentiment indicator, right? So in the near term, it's 25.50. If she pushes above that, okay, that's something that could well happen. But if we find the price breaking back above the 26 area and you find support established above the 26, that is the point at which you could become bullish on the instrument. Before that, I would refrain from being bullish on the instrument. I'm not looking at being a buyer on the Euro USD unless the price is above the 26 price handle. So long as she remains below that, I do consider the bears in charge. But in the near term, it's about the wall and 25.50 holding. I think that is going to be the key technical area to be watching as far as technical support, resistance is concerned on this particular instrument. If we're looking at dollar Swiss appears to be channeling, right? So let's just kill that. All right, so dollar Swiss, what you've got going on here is a breakout and then a channel, right? She's moved vertical, now she's moving diagonally. And what you want to be doing is trying to define that channel, right? You can define it something like this, right? That is how that channel is going to be defined, right? Something like this. So, what you need to happen, in fact, you might even be able to get a sharp wall. I hate drawing lines. When you've got even little gaps like this, what you find is that it does mess up the technical analysis that week. And I'm very careful. I try to avoid using lines through gapping areas. I really have a dislike for that. But what we're trying to do here is to define the channel and define the trend, right? So, in fact, let's take this. Let's take this. All right. So we had a bullish break on the dollar Swiss, and now we've got a bullish channel, right? Okay, bullish break and a bullish channel. If you're going to see strength on Euro USD, you're going to see weakness on the dollar Swiss, right? I think that is pretty much a given. The issue becomes then about the technicals, right? That which one gives you a cleaner technical play. And I think that, we're using on Euro USD the direction of the week or the direction of the month or the direction of the quarter to define sentiment. But the dollar Swiss is moving cleaner on a technical basis, on technical structures rather. So if we're able to define a channel and we want to read bull-bear sentiment for the dollar per se, then reading the dollar Swiss right now may be easier than trying to read the euro, okay? And what I would say is that if it happens that we get a channel break here, then I would suspect that would be the early indication that the dollar Swiss is going to make a move towards the 95.50 price area, right? That's going to be an early indication, right? So maybe this would make a better read than Euro USD. Nevertheless, you do have those levels on Euro USD, so you just have to watch those levels. But from a technical structure or from a structural point of view, the dollar Swiss, she does look just that little bit cleaner than the Euro USD. All right, so a little bit of cross analysis there between what's happening on Euro USD and the USD CHF. I think on the USD CHF here, we had the vertical move, we've got the diagonal. You just need to work on defining that channel. Okay. What else are we interested in? AUD USD. Right. I think this is an important one. Aussie dollar. There's a lot of talk which has started now on social media, on forums, and even in the long room on the Financial Times network, right? Okay, which is a little bit crazy. But there's a lot of talk which has started now that there is a technical double bottom which is forming here on AUD USD. And so I just want to highlight this that whenever anybody says double bottom, right, it really kind of makes me raise a kind of eyebrow anytime someone shouts double bottom or double top, because 99% of the time they're going to be wrong, right? And when you know that a call is wrong, maybe that is something that you can actually capitalize on, right? So here's my reading of AUD USD. The last time Aussie dollar was here at this price level was at the beginning of the year. That was back in January 2014. She rallied from that level to the tune of about 700 odd pips. Over the course of August and September, the price fell 700 odd pips. And since that time, we've gone into a consolidation phase through the middle of September, and pretty much through the whole of October, we've gone into consolidation phase here. The most recent momentum that we've seen has been to the downside. So if the price has fallen and she's going into consolidation, you can very much expect that the price is going to continue to fall, and we can come back here in a few weeks' time, maybe in a couple of months' time, and you might well find that the Aussie dollar is down at 83. Maybe she's even pushed as far as the 80 price handle. We have resistance which has been established at the 89 price handle, and so long as the price remains below that, there is no reason why anyone should be buying this particular instrument. 89 is also significant because it represents the yearly open price, right? So the instrument opened at 89.20. If you want to close your eyes and imagine what the yearly candle on Aussie dollar is looking like right now, it looks something like this, right? That we have here a bearish body, and we have here a wick, and we have here a small wick like this. This is what the yearly candle is looking like on the Aussie dollar right now. All right, so this is a bearish body right now. So long as she is bearish, then you should expect expansion in that direction, right? And so what I'm imagining is that at this stage is by the time that candle goes and closes, and it's not long now, right? It's just 60 days left, right? By the time it goes and closes, that candle could well be looking something like this, with a much longer body than she has right now, because that candle hasn't closed yet. So short AUD USD, how are you going to define risk for that trade? I think that's a different subject, and that's going to come down to you and how you like to take your exposure. But I would stay in selling the rally mode on AUD USD until you have a rational reason to do otherwise, right? So, I don't mind and I don't object to being wrong, so long as the reason why I behaved the way I did was right at the time that I performed that particular action. So, for example, we're looking to fight the momentum on the yen crosses, but we didn't choose to do that while she was rallying 400-500 pips last week, because we didn't have a level to play off of. Now that we have a level to play off of, if I'm right, okay, good, I'm going to make some money. If I'm wrong, okay, there's no reason for me to kick myself because the level at which I chose in order to participate in the market and initiate that trade was the right place to be taking that particular action at. And it's the same here with the Aussie dollar, right? So be a seller. And if she rallies to 89, be a seller. If she's breaking above 89, quit that position. If she falls back below 89, be a bear again and look for a follow through to the downside on this particular instrument. It is the sensible course of action right now. In fact, it's the only course of action right now, so long as the price remains below the 89, so long as the price remains below the 89 price handle. All right. What we've got actually forming here is an ugly bear flag, right? That's actually what's happened here. So you have you get sweet symmetrical bear flags and you get ugly bear flags, and this is actually what's going on here, right? So we've got a ugly bear flag forming here, and we do very much suspect that that is going to break down, and so we're going to look for it to break down, right? And we will start positioning for that short. But like I said, because of the distance involved, 289 from where we are currently, you're talking about 170 odd pips. It's down to you. It's your call and how you like to determine risk and how you like to take that kind of exposure. But Aussie dollar, very much worth keeping an eye on at this stage. It's about using your imagination and really imagining, that can the yearly candle end up looking like this by the 31st of December, right? If it can, then there's a lot of expansion left for this candle to do based upon what it is looking like currently. All right, there's a lot of expansion left. So it could be significant pips between now and the new year. Certainly something worth thinking about. Okay, that's the Aussie dollar covered. All right, so what have we looked at? We've looked at USD JPY, GBP JPY, NZD JPY, Euro, U-Swiss, AUD USD. Okay, last one up, GBP USD. And we want to move to a time frame that will show us all right, let's go to the daily time frame, right? So, all right. GBP USD, I'm starting to turn mildly bullish on this instrument. And I believe that there is a technical in play here. Right? So what we had from a fundamentalist perspective was a sentiment developed, a very bullish sentiment developed on GBP USD, believing that there was going to be an interest rate rise. And we've had that kind of crazy amount of forward guidance from the Bank of England, who told us, hey, it's going to happen early in 2015, and then it was, hey, this could happen before the general election. So everyone started thinking, what, February, March? And then it was, hey, you guys are thinking next year. It could happen even this year, right? So this was our governor's Mansion House speech a couple of months ago, right? That, the market seems to be thinking next year. Haven't you considered that it could even happen this year? And the pound went absolutely crazy on these types of statements. And now most recently, we've had the chief economist at the Bank of England saying, you know what, I think everyone's got it wrong. You really shouldn't be thinking that anything's going to happen on this before September or October of next year, right? Or towards the tail end, autumn of 2015. So now everyone's thinking, what is going to be September, October 2015, right? It really is a story of forward guidance gone crazy. And not only that, but we've also seen now some we're starting to see some weaker readings in UK data also. So, the wage inflation really isn't keeping up. And wage inflation is a key issue as far as economic performance is concerned, because the more money people have in their pockets, generally, the more they spend, and the more they spend, the more money circulates, and the more money circulates, generally, the healthier the state of the economy tends to be, right? So there's a whole kind of fundamental narrative which is taking place there. As far as the technical is concerned, when we had that breakout last year, the first consolidation area, or the first support that we saw established on GBP USD was here inside of this cluster. So I'm just going to push that across a little bit here, all right? And what we're finding is now that, so we had the vertical move, and then we had the diagonal move, not very different from what we were looking at in USD CHF, right? Now the instrument's pulled all the way back. Okay, so she's collapsed to the tune of 1400 odd pips, back to that first support area, right? And what I'm saying is that this first support area is critical. This is the critical area for GBP USD. So long as the price is able to remain inside of this block, and the longer she does that, even if we get a little spike below that, but if she remains in this block and we start getting sideways movement here, and I think I've mentioned this before in my presentations, and the reason I've come back to it is because it's starting to look as though we're getting that sideways move now. If we get that sideways move, then my suspicion is that we are going to get a strong break out of that and a move to the upside, and eventually a retest of the 71 price handle at some point. Right now, whether we're going to be able to achieve that this year, I don't know, right? Okay, but certainly this technical play which I'm outlining here, I think, before it was, hey, could this happen? Now I'm talking, this is likely to happen. I'm in that kind of territory with this. So if I start seeing support structures becoming established inside of the sideways move, I will start becoming interested in positioning myself north on GBP USD. All right, I will start becoming interested in that. And I do believe that this cluster here on the left-hand side is going to be the defining cluster for GBP USD before her next rally, north. All right, just something to kind of be aware of and be on the lookout for. How long does she have to play out? Right, so usually what I do is I box that cluster something like this, and then I just move it across for timing's sake, and I say, if she consolidated there for X number of days, then you're likely to see a consolidation here for X number of days, right? And that might even be a wider, might even be a little bit wider. All right. Now in the near term, remember the instrument has been falling, right? Okay, so we can't ignore the fact that GBP USD had been falling. Resistance has been established at the 162 price handle. So from a technical perspective, from a pure technical perspective, you would say that so long as the price remains below the 162 price handle, actually the bears remain in charge, right? After that, it becomes a question of how confident you are in that break north and how aggressive you want to be, or whether you want to be more conservative. If you are conservative, you've got to wait for a break through the 62, a pullback, and you're going to see support at that area, and then you're going to be looking for that push north, right? And because we're talking about a wave reversal here or a change in trend here, there is nothing wrong with missing the first few hundred pips of that move, all right? You can always get on board later, but at least you know the wind is in your sails, right? And quite often, you got to give preference to that kind of thinking, right? That at least the wind is in your sails and you're getting on board after the move has started rather than trying to be ahead of the curve. Trying to get ahead of the curve is, 9 times out of 10, it tends to be a bad idea. Put your hand up if you agree. All right, okay, but we've all found ourselves on the wrong side of something that we thought would happen and it never did. All right, so it tends to be a bad idea. There's nothing wrong with letting her break north first and then getting on board once that rally has started, rather than trying to be ahead of the curve there. But like I said, the longer she ranges, the longer we get that sideways move, the more I will start to believe that we are going to get a bullish break. And if I see, for example, a sustained sideways move now throughout the bulk of November, then at that point, I will start taking on small parts of exposure, the small amounts of exposure, seeking to position myself for that eventual break at north. This GBP USD really, I think it is one that we are going to have to keep an eye on pretty much the whole of November and see how it plays out, right? So I'm looking for that sideways move. If we get that sideways move, then like I said, I will be positioning myself north. In the near term, it is about 62 price handle. So if we don't get a sustained move, I want to see a break above 62 before I start positioning myself north on this instrument again. Okay, folks, right? I think that's me having covered everything I wanted to cover. If there's anything that I haven't looked at and you want it looked at, just give it a shout in the chat now, or forever hold your peace. Anyone? That Ferris Bueller line, right? Okay. AEDNZD, my gosh, you're an adventurous chap, right? I don't even have it. I don't even have AEDNZD. Who trades AEDNZD? All right, let's take a look. Oh. AEDNZD. It's not showing. Why? Okay. There's the show all. Try again. Here we are. You want to try and make sense out of this? My gosh. All right, let's take a look. Let's have a think. Let's see what's happening on the daily. Yeah, okay, it's short. It's a short, right? What else can I tell you? Can't tell you. It's a short. Say it again. It's a short, right? So, right, similar principle to what we were looking at on. GBP USD, right? So the price fell, she consolidated, and she fell again. And we're just getting a pullback. I'm just going to curve this pullback. We're just getting a pullback into this consolidation, right? And I would say from a technical perspective, so long as the price remains below this consolidation block, then technically, on a wider time frame, the instrument remains bearish. Okay, and now the only thing you have to note here is the bottom of that block is 111, and the top of that block is 116. So, in classical guru style, I'm giving myself a lot of room to, right? Yeah, I'm giving myself a lot of room to breathe here. All right, I'm giving myself 500 pips to breathe here, right? And I'll come back and say, see, I told you it would fall from here, right? But my reading on the daily is that So long as the price remains below this block, then I would actually consider that the bears remain in charge of this instrument. Now, if we're talking in the near term about a bull bear bias, uh, what I would be charting is probably the H4, and what we've got going on here is probably the beginning of a flat channel, right? So I'd be marking it something like this, I guess, right? So take it from here probably, right? So you just mark that, and let me remove this box because it's getting in the way. Shush, genius at work. Right. Just need to mark your lower trend wall. All right, so, man, you know what? Aliens, it's a mess, right? I think the only way you can read it, the only way you can read it is actually on that uh, daily time frame, right? I, I don't think that there's anything to read here on a H4 time frame. What I'm looking at is we're seeing a sideways move here. So either we're going to get a break up through the channel that I've marked, or she's going to collapse and head back towards the lower wall. You know, again, it's the kind of it's guru style analysis sitting on the fence saying we're either going to go up from here or we're going to go down from here, right? But there's nothing to read here where I would look at it and say, hey, you know what? I ought to be positioning myself for a trade, right? I'm not seeing that. So from a technical perspective, there's nothing really I can say. It's just that daily time frame, and I'd say so long as she remains inside of that block or below that block, then I would consider bear momentum actually to be intact from a structural point of view, right? But she could still push 500 pips, and what that means to me is that although I'm reading it, uh, there's no trade. I don't actually have a trade there. I'm just seeing if we can kind of get a flag structure going here, and if there is a flag structure, that might give you a wall that you could use in order to establish bull bear bias. All right, you might be able to use something like this, right? So you don't have to mark 2 here, though. I would sell the tap on that wall and say, okay, so, if she goes taps the wall, sell it, and you'd look for a reaction there. If it happens that she breaks through that, and then you'd look at that and you'd say, maybe that's an indication of bullish sentiment and that she would end up pushing higher. The reason I'm taking that is just we're just connecting resistance with resistance here. That's pretty much all we're doing, right? So, if we're looking for a place to establish bias from, you might be able to use something like that in order to do it. All right, let's just have a look if the line fits anywhere else. Okay, actually, it's a good wall. All right, that's pretty good wall. All right, so we've just taken that from the top, we've copied it here, and what we're finding is that that wall is a significant angle. It actually fits 1, 2, 3 points there, right? Quite precisely. Wow, that does fit quite precisely, right? So okay, so what we could do is we could mark that there as well. And we can take that angle and we can mark it here as well. And there is your best fit channel on AUD NZD. That's it, AUD NZD. No call. Yeah, I think I've done really well here sitting on the fence. But I've drawn a lot of nice lines for you. Okay. Um, right. I think we're done now. Right. So uh, thanks, guys, all of you for attending this morning. Don't forget to check out my website. I hope you enjoyed what you've heard. I present my trade notes each week on my website. So if you have an opportunity, don't forget to check that out. It's www.wmdforex.com. Thanks to FX Street for providing the platform as usual. I'm away the rest of the month, so I have the good fortune of visiting the USA and Canada later this month, doing some legacy trader coaching. I will be back here in December. All right, so I'll be back here first week of December. The good folk at FX Street will send you out an email. So until then, trade well, trade safely, and I'll see you all the next time. Cheers, bye.